What is up, ladies and gentlemen? Wednesday, September 26th. This day might go down in infamy. Let me just say that today made me just go, oh, Jesus. I mean, God, my portfolio got absolutely annihilated today. Let's go to the 1 day. Does it actually show? Point is, that's not right. Because if we go down here, you'll see the new haircut it portfolio. This is awesome. It's nice and simple. Just Guggenheim, Gladstone, and the dividend aristocrats. But oh my lord, would you look at those percentages? Good, which has been one of the namesakes, like common denominator positive. 6% in the red. And then Guggenheim, my beloved Guggenheim, down 16%. I am just getting annihilated. Oh my god. I mean, here's what ultimately happened is that since I changed my portfolio, since I put, you know what, let's just go to the activity tab to make it easier to explain. So if we go back 2 days ago, so I sold off $2,900, so $3,000 worth, and put essentially all of it into good and Goff, an additional good. Oh, this doesn't even do justice. So there was a lot in Guggenheim, and then we look at the next day, and you'll see, where is it? It's in alphabetical. 3,300 in the good Gladstone Commercial Corp, and that 1898 apparently destroyed my dollar cost averaging. And you know what? This is the risk that happens when you just take stocks and you just, sell them at willy-nilly, and you try and buy. You don't even care about timing the market. This is what can happen to you. Just a warning. So if you're on M1 Finance and you have the ability to share off your fractionals and invest into your other portfolios and just destroy the pie percentages, this is an absolute realistic thing that can happen, especially if it's such a large amount. Because as you can see, I have $5,000 in Gladstone now and $3,300 in Guggenheim. Now, Guggenheim, I am especially upset about. So at this point in the video, I want to give a shout out to a commenter on my last video, Tony Palmisano. Thank you so much for showing me the Fidelity scanner and for showing me what is going on with Guggenheim. And oh, this breaks my heart. I can't believe this is happening. Guggenheim has been such a staple with this portfolio. And if we go down, their past two distributions, let's zoom in if we can here. Make it a little easier to see. Their past two distributions, right? Return of capital, 7.3 cents return of capital in each. And this is an absolute nightmare if you own a closed-end fund. That is the last thing you want to see, is a return of capital. If we zoom back out a little bit, you could start to see that it was headed that way, because if we go back to 16 here, all of it was paid by just flat-out dividend income. So basically the investment money that they were receiving, then it came out of short-term capital gains, then it was dividends and short-term, then it was steering towards long-term capital gains, and that's when you can start to see the tides turning a little bit. And then it finally happened, the past two distributions, return of capital. That is nightmarish. This has not happened for this closed-ended fund in over 5 years. I looked at their prospectus, I looked at their 10K essentially. It has not happened to them in a long, long time. And that is a big red flag if you invest in closed-end funds. Once you see that return of capital, it could be a huge warning sign that the fund is not making enough investment money to cover out its distributions. A return of capital is just lowering your cost basis. You're not really receiving a dividend. You're just lowering your cost basis. So it is not a good thing at all. So here's my game plan with this. I'm going to give it till the end of the year. So we're in September. I'm going to give it till December. If this return of capital doesn't go away by the time January's distribution rolls around, it pains me to say that I might have to dump it. And it has been such a favorite of mine. It's up 10% yield. And 10% yield with no return of capital has been amazing. But it's finally happened. It just breaks my heart. So why did I do this move? Like I said, I wanted to be aggressive. So the dividend yield is now significantly higher. If we go to my pies, and then we click aggressive dividends, you can see the dividend yield is at an outstanding 6.9%. So I guess it's not horrendous if I were to have to get rid of Guggenheim. I would honestly might just put this portfolio at just Gladstone and the Dividend Aristocrat, and I might even shave off a few of the Aristocrat pieces. Gladstone, it's a great staple, 12.5 cents every month per share that you own, and it's been paying it out even through the recession back in '09. It's been paying it out, so definitely a good thing to fall back on. It has a 7% yield, so it's not like I would be losing a horrendous amount of yield, but if I have to get rid of Guggenheim, that would be so disappointing. But look, even though I'm like somewhat emotionally attached to Guggenheim, you can't let it get to you, okay? You're an investor. You can't let emotions play a bias in your judgment. So, look, I was hoping to just have this portfolio sit, never sell, and just, let the dividend income in. That's the whole point of this. It's dividend income. I could care less about capital appreciation. All it does is it gives you these haircuts like you're seeing now. It's a bit of an ego booster, right? All these videos of, 15% gains. I know, everything's so great. Now my return of gains is less than the dividend yield itself. And if you scroll down on this gains here, look at that. Capital appreciation of 53 cents. That used to be in the $200 to $400 range. Now all my gains is strictly on dividends, and I'm fine with that. I really am. I do not want to sell, but if push comes to shove and this Goff just turns out to be, such a bad investment. I even emailed the investor relations at Guggenheim, and I'm like, so can you explain to me what happened in the return of capital? It hasn't happened in 5 years. Why is it coming for these past two? Why is it happening for these past two distributions? Should I expect this in the future? Are you struggling meeting investment income? And it was even more disheartening getting the email back for them, because they treated me like I'm an idiot and I had no idea what I was doing investing. And they were saying like, we have the right to do many different options for our distributions. Return of capital is one of them. And it's like, no shit, I'm asking you about that. But, whatever. So, hey, we're in a hole. Whatever. I'm in it for the dividends. I am not in it for capital appreciation. So, it is a little bit of an ego shove, but we get through it. So, we're just going to have to grind it out. So, the daily deposits will continue. So, the dollar cost average, as these have hit a little bit of a stub here in the market. So dollar costing back down is just all you can do at this point. And I'm fine with it. So hope you enjoyed this video. It's just a reminder, weather the course. You will hit rough patches, and this is a rough patch. Let me know what you would do if you have the Guggenheim fund, because it just breaks my heart that the return of capital has happened. But who knows? Maybe it's just a 1 quarter thing. Who knows? Maybe I'll be pleasantly surprised, because it did happen about 5 years ago, and it was only for like 3 to 4 months. So maybe it's just, a tiny bit of a rough patch. Maybe they're between investment holdings. Some of their assets may have matured because they hold a lot of short-term bonds and whatnot. So we're just going to have to wait and see. It is what it is. There's nothing more I can do. But there's the new portfolio. I will leave the link to this portfolio if you're interested in the description below, along with my referral link, where if you sign up to M1 Finance and use the referral link, if you invest $100, you will get $10 for free. Guggenheim at 28%, S&P Aristocrats at 30%, Gladstone at 42% of the portfolio, a 6.9% dividend yield. Hey, if you use this pie now while the prices are a little low, who knows? Maybe you'll get a little bit luckier than I am. So, this has been the Dividend Grinder. Always feel free to leave comments below. I love listening and talking back. And I will see you guys in the next video.